You found the perfect car, but then the anxiety hits. You're worried your credit score means an automatic no from every lender. What if I told you the minimum score is probably lower than you think? And even if your number is below that line, there's a clear path to getting the keys. Stick around, because we're breaking down the real credit score you need and the exact steps to take if you're not there yet. So, what's the minimum credit score for a car loan? While there's no single magic number, data points to a clear dividing line. Most lenders consider a FICO score of 661 to be the start of the prime category. If you're at 661 or higher, you'll generally get better rates and have a much easier time getting approved. In fact, one Experian report found that the vast majority of car loans go to borrowers with scores of 661 or higher. Lenders sort scores into tiers. Super Prime, 781 to 850. You're golden. You'll get the best interest rates possible. Prime, 661 to 780. This is the sweet spot where most borrowers land. Non-prime, 601 to 660. A loan is still possible, but your interest rates will be higher. Subprime, 300 to 600. Approval is tougher and the loan will cost you more. The difference in cost is huge. A super prime borrower might get a new car loan with a 5 to 6% interest rate, while a subprime borrower could be looking at over 13% for a new car and close to 19% for a used one. On a $30,000 loan, that can add up to thousands of dollars. But here's the key. Even a subprime score doesn't make a loan impossible. It just requires a different strategy. By the way, you can check your credit score right now in just a few minutes. I've put a link in the description to a trusted and affordable credit monitoring service. You can get your full credit report and FICO score to see exactly where you stand. Go check it out. If your score isn't there yet, don't worry. This is about making a plan. Here are 4 things you can do right now to boost your chances. First, save for a down payment. Aim for 10% on a used car and 20% on a new one. A down payment lowers the loan amount, which makes you less of a risk. It shows you have skin in the game, and lenders are more willing to work with a lower credit score. Second, consider a cosigner. This is a friend or family member with strong credit who agrees to take responsibility for the loan if you can't pay. For a lender, a good cosigner turns a risky loan into a safe bet. Just remember, this is a huge favor, as any missed payments would also hurt their credit. Third, shop at the right places. Start with your own bank or a local credit union. Credit unions are often more flexible with members who have imperfect credit. Also, look for online lenders that specialize in auto loans. Getting pre-qualified before you visit a dealership gives you a major advantage and negotiating power. Fourth, be smart about the car you choose. The newer and more expensive the car, the tighter the lending requirements. Lenders are much more willing to finance a less expensive, reliable used car for someone with a shaky credit history because it's a smaller risk. It might not be your dream car, but it's a great stepping stone. The key credit score most lenders look for is 661 or higher, but that number isn't a brick wall. It's just a hurdle. If you're below it, your path to a loan is through a strong down payment, a possible cosigner, smart shopping, and choosing a sensible car. Your credit score today doesn't define your future. You have a roadmap. Now go get those keys.